week. The chip giant accounting for over 36% of the Nasdaq gains this year. So for more on how bullish AI sentiment is really driving the broader market, we want to bring in Lizanne Sonders, Charles Schwab, Chief Investment Strategist, here to talk that and a lot more. Lizanne, it's great to see you. So just talk to us just about how important, how significant, or maybe not, these earnings reports are from Nvidia after the bell tomorrow, what that really means in the context of the broader market.
Well, keep in mind, as you guys know, I don't cover Nvidia I don't cover any stocks. I don't do anything with individual stocks. But obviously, as a poster child for the AI boom, not to mention the best performer within the Magnificent Seven, I think it's important. We know the bar is set high, so I think an extrapolation problem could develop, but whether that starts tomorrow is hard to say. But I think psychologically, at a minimum, it's important for the profile of those types of companies as well as for the market.
Lizanne, what do you make of the market participation right now? We've been waiting for this broadening out. We are starting to see that a little bit, especially when you take a look at that sector action. So then maybe is the market going to be okay? Not really specifically just focusing on Nvidia, but really just moving beyond some of those larger cap tech names, which the market had been so focused on.
Yeah, I mean, there is still a mega cap bias within the cap weighted indexes, but you've had much more dispersion, particularly develop within the Magnificent Seven, which last year, they were not the seven best performers, but you only had to go down to about the ranking number 60 within the S&P 500 to capture all seven of those names. Now you've got a couple of significant laggards, obviously, with Tesla and Apple. So now it's more the Fab Four. But in the past month, you've had this sort of stealthy leadership pickup in areas like the Russell 2000. Some of that is down the quality spectrum, and I think more a function of kind of smaller speculators out there. But I do think that there is an opportunity. I think active is now operating on a more level playing field with passive, with the return of the risk-free rate. There's price discovery again, fundamentals reconnecting to prices. That said, I still expect in general there to be a larger cap bias within the market.
For those who are, counting down the moments until the opening bell here this morning, Lizanne, and trying to figure out if they are deciding to take profits at some of these new highs that we've seen, whether that's in the Dow, whether that's in the Nasdaq, and where to reinvest that into, where are some of the top areas that are piquing your interest right now?
Yeah, so we have something called Schwab Sector Views. We relaunched them earlier this year after about a 2-year hiatus because of just the unique aspect of this cycle, massive sector-related volatility that couldn't be explained by fundamentals, factors having more consistency in terms of where leadership resided and didn't. But we relaunched Sector Views earlier this year with 3 sectors with outperform ratings, and that hasn't changed since the beginning of the year. So that's financials, materials, and energy. So clearly a cyclical bias within the sort of group of sectors. And then the 2 underperform ratings that we have are real estate or REITs and consumer discretionary. Everything else would be in that neutral or market perform category.
Lizanne, when we talk about the likelihood of rate cuts, the timing of rate cuts, what are you anticipating up until this point? And the fact that we are starting to hear even more from policymakers, maybe saying it makes more sense to wait at this point, given the conflicting data that we've gotten out.
Tell me the data, and I might be able to tell you when the Fed starts, cutting.
Yeah,
I think it's such a parlor game of, well, I think it could be July, I think it's September, I think it's once or twice, without there being backup in terms of if you think they're going to start sooner rather than later, what is that based on? What's the math associated with base effects and the core PCE? What the month-over-month readings have to be? The combination of the labor market data, because I think the 2 parts of the Fed's dual mandate are in sharper focus right now versus last year during the tightening part of the cycle. It was clearly just inflation. So data dependency means that it's going to depend on the data. I think patience is the word of the day. I'm not sure the Fed's going to regret that as much as they probably regret transitory. But everybody that is out there in the Federal Open Mouth Committee suggests that they're not there yet.
With the biggest bears putting some of their pride aside more recently, Lizanne, I wonder, what are they finally coming to grips with here with this market right now and some of the projections towards year end?
Well, as you know, we don't do year-end price targets. I have sympathy for strategists that have institutional client base. Ours is individual investor that have to go through the sort of dog and pony show of those year-end targets. I know you're probably talking about Mike Wilson at Morgan Stanley, for whom I have great respect, and he actually has been pretty consistent in saying some of what I just said, the very unique cycle that we are in right now, and how uncertain the environment is in terms of data releases, and trying to get a grip on the fact that we've got response rates down. Some of the revisions across the spectrum of economic data have been much bigger than usual, and it's hard. In addition, the cap weighting that we talked about already masks a lot of the churn going on under the surface. So the NASDAQ, as an example, obviously up 10% in the last month or so, only had about a 7% maximum drawdown this year. But the average member within the NASDAQ has had more than a 30% drawdown this year. So a lot of churn under the surface. And I think it makes the job of those strategists that have to do year-end price targets, as if anybody can pinpoint that, quite difficult in this unique cycle.
Certainly. I'm going to get Federal Open Mouth Committee printed on some of the Yahoo Finance swag T-shirts that we get fired up here. Liz, thanks so much. Lizanne Sonders, who is the Charles Schwab Chief Investment Strategist. Thanks so much, Lizanne.